Going over the trades on the day, interesting price action, have some interesting statistics for you on that. But let's take a look at the results today. Down today, choppy, really choppy day. The market should have sold off several times this week, but it was pushed higher. And we'll go over the Fed's balance sheet, some interesting statistics as well. Down on the week in the 200K, about 1970. Down the 50K portfolio, about 445. These are the results. These are the live results for real trading, but they're not the results for the. These are not the final results based on the brokerage statement. I won't have those until tonight or tomorrow. But if you're asking about live results, you can contact us through our website. We had a tough January and February. We are making a comeback though in March, and almost a break even on the year after a strong March as we revised our portfolio to trade micros with the extra volatility. And this week has been a bit of a choppy week, and I'm going to go over some statistics for that. Last week, the 200K portfolio was up 24,458, down 1970 this week. So working back towards break even, 4 trading days left in the month, and you can just see how sloppy this was. Several times this week, the market looked like it would roll over. Monday, let's look at it on a 15-minute chart. Monday, let's see, Friday, Thursday, Wednesday, Tuesday. Monday looked like it would roll over. Tuesday was just straight up. It didn't look like it would roll over. Wednesday looked like it would roll over. It did roll over a little bit. Thursday looked like it would roll over here, rallied. Friday looked like it would roll over, down, closed down on the day, but strong comeback. And so one thing we've seen in the S&P, though, that has not happened, it's only happened twice in 80 years, is that the S&P has gone up 6 out of the last 8 days of 1% or more. As of yesterday, and that had not happened it happened in 1974 and 2020 in the last 80 years. So to give you an idea of how strong this rally is and how, in my opinion, it's fake, the bulls are claiming that the market was extremely oversold and that it was a brutal bear market. But considering the bull market we had, this was not a very brutal bear market in my opinion, and it never really had a lot of strong selling, and now we've bounced as if there's been capitulation when there really hasn't, and the fundamentals haven't changed. The bulls got together last Tuesday after the Fed meeting, and the market changed tone, and it's acting like it did 2 years ago, making some bullish records. Like I said, 1974 and 2020 were the only other times when the market the S&P has posted 1% or more gains in 6 of the last 8 days, and it did that this past, as of yesterday, it made that same record 6 out of 8 of the last days. So interesting price action. Let's look at the Fed's balance sheet as well. This is based on trillions of dollars. It's at 8 point as of March the 23rd. I guess 3 days ago, the Fed's balance sheet is 8.96 trillion. And you can see back in 2008, it was just below 1 trillion. This is in millions. So 1 million millions is a trillion. And so it was around 995 billion in 2008, and it's multiplied by 10. You can see what happened in the pandemic, and it's still going up. It's making record highs. It's at record highs this week, 8.962 trillion. It's gone up 58 billion since the last, or it's 8.954, 8.962, so about 8 billion this week. From March 16th to March the 23rd, it's gone up 8 billion, and in 2 weeks it's gone up about, since March the 2nd, 8.904 to up about 50 billion, since in March so far. So the Fed's balance sheet is still increasing, and that creates this unnatural bias of the market to go up on days when it should go down, and it can sometimes make it more difficult to trade. All right, here are the trades on the day. EVP, nice trade here at the end of the day. Small trade, 60-minute breakout. Just in this environment where the market is making a choppy move higher. We had some winners and losers on the week yesterday. We had a couple of losses, then a winner overnight, hitting its profit target, then a loss, and slightly down on the day. And gap continuations gave back a nice gain. Always tempted to put a profit target on the short side. And you just see this massive V reversal that we keep having. Lots of V reversals in both directions. This gap continuation with a bigger stop loss also lost on the day at this very high point. And so kind of a worst case scenario, tick reversal, small loss on the day. First trade was a winner, gave back that, and then the market reversed and gave back that. So small loss on the day on tick reversal. And SR counter trend tried to buy the dip, lost on the day. Gap continuation, or gap Cobra 2022 up on the day. And those are the NASDAQ trades. Pretty sloppy day in the NASDAQ, sloppy, choppy. And in the S&P adaptive moving average, went long, reversed to short, went long, down on the day. SR counter trend 2, up on the day, tick fader, down on the day. So just a sloppy day across the board. And the market, let's look at the daily chart for the market. So here is the NASDAQ, 9 days in a row where it makes either a higher low or a higher high, kind of a straight up 2,000, almost 2,000 point counter trend rally, halfway between this high and this low, even though it looks closer to this low. And the fundamentals haven't really changed. It was just a kind of more of a psychological rally, in my opinion. And we had bonds rally today, or interest rates rally today. Looking at a couple of my top strategies, we trade this one. We're considering trading this one. It's had 2 losers in a row now. But you can see the big move down in bonds, massive sell-off in bonds. The stock index is sold off when bonds sold off, and then bonds stayed down, but the stock index has rallied back. Crude oil rallied back today. I think crude will go higher. I think interest rates are going higher. And I think that inflation is based more on money printing than it is on the supply chain. And so these are the couple of strategies that we're considering adding in April on drawdowns. Let's look at Cobra Crude. We'd add these on a micro basis as well. We discounted this because we developed it back in this time frame, and it didn't do anything until February. And then since February, it's had a massive run, about $30,000 in gains in a very short period of time in crude oil. We already traded on the NASDAQ. Here's what it's doing on the NASDAQ. And in bonds, we considered getting in on this drawdown, and we didn't, and it had this massive run up. So this is one of the top strategies to trade. We're already trading on the NASDAQ. We're focused on the stock indexes, but crude oil and bonds are a couple of markets to consider trading with this strategy. So those are the trades on the day for March the 25th, 2022, closing out the week on a down week after a massive up week last week with 4 trading days left in the month. Will be interesting to see what happens next week after this massive rally in stock indexes. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.